welcome back. On today's quick video, I'm going to talk about what I'm watching in the market today, the stock market, and what I'm doing for investing. If you haven't been watching the market, it's not looking good. It's kind of crashing, and it's been coming down day after day after day after day, and it's something that many people have not seen. In fact, we haven't seen a market like this since COVID, actually, but that was more of a short-term market than what I believe we're going to see right now. I've been fortunate enough to invest through a few different cycles that are longer term. A lot of people investing today have not seen what we're going through. In fact, since about 2011 to 2014 and on, the market has been surprisingly stable due to low interest rates, economic policy, and we're just in the past couple of years starting to see things return to what I would view as a more normal market, where it's subject to market dictates and market conditions, not due to low interest rates and Fed-controlled policies. Now, before we get too far into this, I do need to say this is not investing advice. It's not market advice. This is just my experience and a couple of experiences that I am sharing with you. So if you are not familiar with the market, get with an investment advisor, get with someone who's a professional fiduciary that can actually help you and recommend things for your specific scenario. But here's what I'm watching right now. I go to a few different websites when I want market information, and the free ones that you can use are MarketWatch, CNBC, Benzinga, and Seeking Alpha. And there's a whole bunch of other ones. In fact, if you have something else to recommend, please do put that down in the comments below to help everyone else that may be watching this video. But what I've seen in today's market that reminds me of other markets we've been through is there's going to be a lot of volatility. We're going through a political time frame right now where the political people who are in control are threatening and counter-threatening tariffs. We're hearing about trade wars. We're hearing about market volatility. We're being told that the markets are going to crash and that the politicians are going to cause the end of the financial world as we know it. And sure, that could happen, but the reality is they're posturing, they're negotiating, they're looking at different deals, they're trying to figure out what's best for everyone. And this type of thing used to happen all the time. We have not seen people countering tariffs. In fact, what I believe has happened is our economy has been so strong, and worldwide, a lot of economies have been very strong. And when you have strong economies, generally, people that are looking at the political natures or the political controls get a little bit sloppy and don't recognize when there have been inefficiencies or inequalities created between different countries. What we're hearing right now, what's starting to come out, is there's a lot of tariffs that are being placed on one company, on one trade side, that are not being placed on the other. And that is okay, I guess, if everyone is making money, but when you have inefficiencies and inequalities created, the side that is being more unfairly penalized, that has the tariffs placed on their products, is going to not benefit, and it's going to at some point come to a head, which is what we're seeing at least being claimed right now in the United States. We're also actually, I just recently saw that China is starting to claim that Canada is unfairly tariffing some of their products, and for whatever reason, there's a lot of people in Canada that are actually now starting, in some of the videos I'm seeing and some of the headlines from smaller entities, that some of the Canadians are realizing that their country are tariffing a lot of products unfairly. So feel free, if you know of some actual tariff details or some websites, to put links down in the comment below that would talk about the tariffs on each side and what countries are tariffing, and that may give people some good research. At the end of the day, that's not going to matter too much. What does matter is what are the opportunities for us to invest in, or what are things we want to stay away from. Opportunities, let's start there. The market has come down significantly. So, for example, if we look at the S&P 500 and let's look back at the last 3 years, we'll see that the market has trended up. Of course, you have ups and downs, ups and downs, ups and downs. But right now, the drop that we've seen recently is much larger than some that we've seen in the past. In fact, if we go back to even the 2022 time frame, we're kind of seeing some of the bigger drops, and we're seeing one of those right now. If I were investing in a 401k currently, and because I'm self-employed, I'm not, but of course I have other retirement accounts, I am investing more now than I was before. If you don't have the option to adjust your investments, my thought process would be to continue that flow of money in. Don't stop investing because the market's down, because Generally, funds are going to adjust the stocks that they have in those funds, and they'll continue investing in high grade stocks or good stocks. And right now, with the market being down, is not the time you'd want to pull back on your investment. You'd want to put more in if you can, because it's like going to the store and buying something on sale. You can buy more with your money than you could if you were buying at the top. It's always great to start here at the bottom of a buying cycle or down here at the very bottom and see it go up. But if you look at financially long term, if you're looking at a 1, 3, 5 year window on this, if you buy when the market is down, generally you're going to make more money than if you buy when the market's at the top. That's just how it works. So consistently keeping your money going in, doing what is called dollar cost averaging in, when the market is down, is going to net better returns than going up. It just makes sense. As far as putting money on the sidelines to work, generally what I'm looking for is, what is a catalyst? Is there a good catalyst? I have put a little bit of money in the last week, not much, because again, there's no real view of what's happening. But there are a couple of things that I have used historically that have helped me out tremendously. Generally, we don't get to a bottom. Now again, the last decade has not necessarily followed this suit, but before that, what has historically worked is, generally you're not going to get to a bottom until people give up hope. Now, not the overall economy, we're not seeing a lot of horrible things happening in the economy, but we do see people in the investment world giving up hope. When the headlines are all negative, that's generally when I'm going to start thinking about investing, because it means that people are going to have sold off their stocks. There's going to be some good bargains to be had for good quality stocks, and we're not to that point yet. Now we're seeing people talk about recession fears. We're talking about some of the things like Trump rejecting pleas from businesses to give clarity. Think about this: if you're negotiating, you can't tip your hand. You can't say, yes, we're going to give it another week and then we're going to waive the tariffs, because then everyone's just going to wait another week. So you're not going to see good negotiating politicians tip their hand as to what they're going to do, but you will see, hopefully, more meetings happen. You'll see different things start to happen where people are making deals. As deals start to get made, the market will gain some confidence and you'll see things come back up. But until I see the headlines turn negative, people start to lose hope that the market's actually going to get a positive direction, I'm going to most likely hold back unless I see significant opportunities. If I see good quality stocks that are way down, but their earnings are still good, their prospects of additional earnings are good, the narrative is good, there's a need for their product, I will most likely be buying into those as the market continues to go down, because again, we don't know when it'll turn. And by the time it turns, the best deals are already gone. So when I'm looking at the deals, I'm watching MarketWatch general headlines, I'm watching CNBC, I'm watching Benzinga. I will track portfolios or different stocks that I want to watch on Seeking Alpha and get a sense for where the overall market is, where the sentiment is, and then I'll do research on those individual stocks. There's a couple of quotes that you can use just as guidelines. There's one that I don't remember the exact quote, but it talks about the best opportunities are not to be had until there's blood in the streets. Not literal. That is a figurative for people who may get triggered by it. It's a figurative statement of when people have given up their hope, when it looks like everything's bad, that's usually the best time to buy. The other one is the old quote attributed to Warren Buffett of, be fearful when others are greedy, be greedy when others are fearful. Right now, there is uncertainty. There's not necessarily the fearful piece, and there's a lot of people trying to be greedy and find the best deals. So you've got to be very, very, very careful if you're going into buying stocks today, because you don't necessarily know what's going to happen. If you look back a year ago, there were still a lot of people being greedy, and as the market was hitting 52-week highs consistently over and over and over, that made me very fearful, because the market cannot consistently hit 52-week highs. It's a volatile market, or there needs to actually be volatility in the market for it to be healthy. The assets have to be priced and repriced according to the success of those assets. We all know, or we should know, that the market is more emotional than it is logical, but it will always trend to the logic. And as we're watching investments, we need to make sure that we're watching the good stocks and buying at the right times. Again, back to my disclaimer earlier, this is not investment advice. This is simply what I'm doing. But what I'm starting to watch is what good quality stocks, what stocks will be here long term, are having the most financial issues, or are they getting hit with bad news that will only be short term and they still will continue the long term narrative. Honestly, the big names sometimes are the ones that are doing the best. the Googles of the world, Amazons, Microsofts. Microsoft I'm a little bit cautious, I'm very cautious of, I actually should say, because they seem to not be able to have positive trends long term. That's my experience, not again a recommendation. But the stocks that I am watching are the ones, let's actually go over here to what is triggered under a portfolio. I love the Apples of the world because they have consistently been out there. They have products that people like, that they use. They're not as innovative as they once were, but they have done very well. Amazon, of course, is a very good shopping trend, and as we get into another market where the economic times are more difficult, when things are good, people trade convenience and price. They counter trade those when the economy gets tough, and Amazon does a very good job of providing low costs, and people will trade a little bit of that convenience and being able to get things now to buy stuff on Amazon cheaper. Google is something that is just necessary in everyone's life. They have a lot of different things on their side. It's not just search anymore, but search is a main thing that people pay to advertise to get to consumers. They do stop advertising on the way down, but then they start advertising when it looks like the market is starting to rebound, because that's how companies make money, is bringing consumers in. You bring consumers in by getting your ads out there and by search. Meta, Facebook, they have a lot of different things that are very helpful and make a lot of money. They're going to benefit from the AI trade. They have, of course, Marketplace, which people are using when the market trends down to buy things less expensively. People are connecting on Facebook, Instagram, all of those platforms. WhatsApp, I've heard rumors is starting to be monetized, so it has a lot of tailwinds that can help them in a down economy. Even though it's a massive company just like Google, Amazon, Apple, they still will make money in these type of economic conditions. But I'm waiting until they go down to another level so that I can buy them at a good price. NVIDIA is one of those challenges where they have run up so fast so far. They have come down a significant amount lately, but will they continue? And this is something that if we look back, that we can actually go back to something that's very similar, and I would liken it to fiber in the early 2000s, late 90s. And there was a huge trend where people talked about fiber being the next big thing. If a company had anything to do with fiber at all, their stock valuations would fly through the roof, because everyone knew that fiber was going to be what transmitted the data over the internet, and the internet was the end all be all at that time. When it crashed, when the dot-com crash happened, fiber companies became worthless, and there was fiber literally in the ground, fiber optic cable in the ground, that became worthless because no one needed it anymore, and it was sold at pennies on the dollar. Well, in today's world, fiber is very important for all sorts of things, including cell towers and businesses and anything, and they're putting fiber in the streets to come to the homes because people are talking more about bandwidth. But a lot of that infrastructure was laid in the early 2000s, late 90s, and it's now being utilized, but it was sold for pennies on the dollar. I see a similar thing happening in chips and the GPUs and things like that have been processed, that the valuations are so high on, with super high profit margins, because we'll have a lot of that out there. And as people start to recognize what AI can actually do and the people that will benefit from it, we will see companies that have bought a lot of these NVIDIA and AMD high-end chips that don't need them anymore, because they're not profitable, and you can't function, you can't run if you're not profitable, and if you're a business. So we will see some of that capacity drop off, and NVIDIA could be affected by that. So while I think NVIDIA is a great company, amazing products, I'm watching it currently and not adding to my position there unless I see the demand turn around, and then I'm still a little cautious. PayPal is an interesting one where it could be affected. PayPal used to be the go-to, as everyone knows, for financial online buying. Now it has become a commodity and has been very affected. They've done a decent job of turning some things around lately, and they may actually get some tailwinds if the government does shut down the CFPB, the Consumer Financial Protection Bureau, because then there will be less oversight and regulation. And there was a headline today that companies like PayPal and Stripe and others may benefit from that. So we'll have to look at that and keep our tabs on it. Tesla is an interesting one, and I don't have time to go into the details on this video, but what I'm watching is what are the companies that can benefit from the current trends. What are the items in their portfolios that can be a catalyst to drive that company's stock higher, as we're waiting for other items to figure themselves out. And that would be the economic things, the political natures, and then those type of things. So currently what I'm doing is for long-term consistent residual investments where you're making those investments consistently, you want to keep doing that in today's market. And then as you're watching for where to place other money, don't place it all at once. You would definitely want to, or I'm not going to place it all at once. I'm going to buy in chunks as I see the market going down or up until I see some sort of a catalyst, and then I may make some bigger investment moves. That probably doesn't give you a lot of clarity, but it does definitely tell you a couple of strategies that I use in my personal life. I hope this has been helpful to you. If it has, please give us a like down below. If you have any specific questions, please put those to your financial advisor who knows your personal situation, your financial situation, and can tailor their advice to you specifically. But if you do have other information that you'd like to share with others that may be helpful to them, feel free to put that down in the comments below. And if you'd like to see more videos like this, subscribe and feel free to share. Thanks for being here. We'll see you on the next one.